Another week in March, and another bank at the verge of collapse. Deutsche Bank is facing fears of a collapse after its shares dropped over 10% on Friday and about 30% since the banking crisis began on March 8. The banking crisis was triggered by the failure of Silicon Valley Bank earlier this month, which led to the government-backed takeover of Credit Suisse by rival UBS. Deutsche Bank is one of the 30 banks considered globally significant financial institutions under international rules, so its failure could cause widespread losses. The bank has seen a rise in the cost of credit default swaps, which are financial derivatives that insure bondholders against the bank defaulting on its debts. Despite having capital reserves well above regulatory requirements and 10 straight quarters of profits, Deutsche Bank is suffering from low confidence in the banking system and contagion from other troubled banks. Deutsche Bank was founded in 1870 in Berlin as a specialist bank for financing foreign trade and promoting German exports. It subsequently played a large part in developing Germany's financial services industry, as its business model focused on providing finance to industrial customers. Deutsche Bank became one of the largest and most influential banks in the world, with a presence in over 70 countries and a leading role in global finance. The bank's share price has declined significantly over the years, from almost €90 before the 2008 financial crisis to €8.25 as of March 24, 2023. The bank has paid more than $9 billion in fines and settlements since 2008 for various improprieties, which have eroded its profitability and capital base. The bank has faced regulatory scrutiny and sanctions from various authorities, such as the U.S. Federal Reserve, the European Central Bank. The bank has lost market share and reputation in some of its core businesses, such as investment banking and wealth management, as customers and investors have lost trust and confidence in its integrity and competence. The bank has had to undergo major restructuring and cost-cutting measures, including exiting or reducing some of its activities, selling off assets, and cutting thousands of jobs. Deutsche Bank has faced several scandals in the past few years that have damaged its reputation and resulted in hefty fines and settlements. In 2015, the bank was fined $2.5 billion by US and UK authorities for its role in manipulating key benchmark interest rates such as LIBOR, which affected trillions of dollars of loans and contracts worldwide. In the same year, the bank also agreed to pay $258 million to U.S. regulators for conducting transactions with countries under U.S. sanctions, such as Iran, Syria, Libya, and Sudan. In 2017, the bank settled with U.S. authorities for $7.2 billion for its involvement in selling toxic mortgage-backed securities that contributed to the global financial crisis of 2008. Also in 2017, the bank was fined $630 million by US and UK authorities for failing to prevent the transfer of $10 billion of illicit funds out of Russia through sham trades. In 2022, the bank's asset management arm was raided by German prosecutors over allegations of selling investment products as more environmentally friendly than they were, involving over $1 trillion of assets. The bank's involvement in various scandals and legal cases that eroded its profitability, capital base, and reputation. The bank's exposure to risky and unprofitable businesses, such as equities trading and derivatives, that resulted in losses and write-downs. The bank's failure to adapt to changing market conditions and customer preferences, such as digitalization, low interest rates, and environmental concerns. The bank's vulnerability to external shocks and contagion effects from other troubled banks, such as Credit Suisse and Silicon Valley Bank. The bank's lack of confidence and trust from investors, regulators, and customers, as reflected in its declining share price and rising credit default swaps. The term "too big to fail" is often used to describe banks or other financial institutions that are so large and interconnected that their failure would cause severe disruption to the financial system and the economy. Deutsche Bank could be considered too big to fail, but that does not mean that it is invulnerable or that it will always be rescued. Rather, it means that its failure would have serious implications for the financial system and the economy, and that authorities would try to prevent or mitigate such outcomes by using various tools and measures. While Deutsche Bank's recent share price drop and exposure to risky businesses and legal challenges have raised fears of collapse, there are several reasons why a bank run is unlikely in the near future. The bank has a strong capital position, a diversified and stable funding base, access to central bank liquidity support, and the backing of the German government. Additionally, despite recent challenges and negative news, Deutsche Bank's customers and investors have shown resilience and loyalty. However, the bank's ongoing challenges highlight the need for continued vigilance and reform in the banking industry to ensure stability and avoid future crises. Do you think this is the next bank in line to fail? What will happen next week? Here is a quote from Simon Johnson about the banking industry. The banking industry is the most regulated industry in the world, and it still manages to fail spectacularly every few years. Thank you for watching, and don't forget to subscribe to our channel for more videos like this.